Coherent delivered record fiscal 2026 fourth quarter revenue of $2.05 billion, up 13% sequentially and 34% year-over-year, or 42% on a pro forma basis excluding divested defense and German assets. Full-year revenue reached $7.12 billion, up 42% to pro forma. Fourth quarter non-GAAP gross margin expanded 215 basis points year-over-year to 40.2%, while non-GAAP EPS surged 74% to $1.74, bringing full-year EPS to $5.61. Growth was powered by the data center and communications segment, which accounted for 79% of total Q4 revenue and grew 59% year-over-year to propel full-year segment revenue up 40%. Data center revenue alone climbed 66% year-over-year in Q4, driven by accelerated adoption of 800G and one-side optical circuit switching. Supply expansion saw 6-inch indium phosphide output doubling ahead of schedule. Backlog visibility now stretches into calendar 2028 with long-term agreements extending through the decade. First quarter fiscal 2027 guidance Prana Krihi $2.2 billion and $2.4 billion. Non-GAAP gross margin between 39.5% and 31.5%, and non-GAAP EPS of $1.85 to $2.05, with management targets setting over $3 billion in quarterly revenue by fiscal 2027, and $246 million in Q4 to support infrastructure buildouts, while industrial segment revenue remained flat on broad market weakness. Joe Cardoso from JPMorgan asked for an update on the 6-inch indium phosphide ramp and its gross margin impact, followed by a query on near and long-term co-packaged optics revenue timing given market noise regarding delays. Harsh white output will double this quarter, 1 quarter ahead of schedule, and doubled again by calendar 2027, noting June quarter laser production rose 80% year-over-year to support matching transceiver growth. On CPO, management reported no pushouts or delays, confirming demand is being pulled in, with initial revenue from high-power CW lasers beginning in the December quarter, alongside accelerating engagements in near-packaged optics. Simon Leopold from Raymond James asked about gross margin tailwinds and whether internal laser capacity limits current transceiver shipments. Management answered that gross margin improvements stem from lower input costs, operational efficiencies, pricing optimization, and superior 6-inch yields over 3-inch production. On capacity, management confirmed demand currently exceeds supply, making internal indium phosphide expansion the primary bottleneck and growth driver. George Nota from Wolfe Research asked for the revenue breakdown between 800G and 1.6T transceivers and queried the capital expenditure trajectory following the Q4 surge. Management answered that 800G remains the majority of volume and will grow through calendar 2026, while 1.6T is ramping rapidly and will cross over in volume during calendar 2027. Regarding capex, management noted Q1 spend will step up sequentially before moderating later in the fiscal year, reiterating an 18-month payback period backed by clear order visibility. Ryan Koontz from Needham asked whether optical circuit switching capacity constraints reside in fabrication or assembly, and inquired about competitive dynamics in telecom. Management answered that OCS expansion involves scaling both internal component production and back-end assembly across 2 operational sites. On telecom, management highlighted strength in DCR and ZR+ modules, alongside pump lasers and high-end subsystems. Blayne Curtis from Jefferies asked for details on the newly announced PhotonLink platform and its initial revenue timeline. Management answered that PhotonLink spans the full optical signal chaining, including lasers, passive components, polarization maintaining fiber, and silicon photonics PICs for both CPO and NPO, with initial revenue ramping in the December quarter. Karl Ackerman from BNP Paribas asked about sequential growth expectations for communications and the market size for multi-rail scale across applications. Management answered that communications will deliver strong sequential growth in Q1, while multi-rail represents a greater than $2 billion addressable market by calendar 2030, with customer sampling underway and revenue ramping in early calendar 2027. Meta Marshall from Morgan Stanley asked how customer long-term agreements influence pricing stability and capacity commitments. Management answered that multi-year LTAs provide firm volume visibility and predictable pricing structures, aligning internal capital investments with committed customer demand. Vivek Arya from Bank of America asked about non-AI industrial recovery timelines and the long-term revenue opportunity for thermal cooling materials in data centers. Management answered that industrial capital equipment display and semiconductor bookings are recovering, while thermodite sampling is active with strategic customers targeting a revenue ramp in the second half of calendar 2027. Michael Genovese from Rosenblatt asked about competitive position and market share trends across 800G and 1.6T transceiver product cycles. Management answered that Coherent maintains a leading market share position enabled by vertical integration, internal laser supplying, and multi-site 6-inch manufacturing capabilities. Investors will monitor whether Q1 capital spending yields expected transceiver output while tracking the December quarter commercial ramp of PhotonLink and co-packaged optics.